What's up, everyone? It's Eric with Option Edge, and today we're looking at the S&P 500 and the VIX Volatility Index. And yeah, it's safe to say that September has been quite the down month. We started, let's look, basically, yeah, right at the beginning of September, we've just seen red to the downside. And I made a video, I'll link to it up here, talking about how, yeah, September and October tends to be a pretty bad month. You can see the S&P 500 is in the relative strength index is almost at the oversold 30 level, and it hasn't been. Heck, let's look here. The S&P, you can see it probably hasn't been this low since the coronavirus, and yeah, the sell-off is pretty significant if you look at the historical RSI. So, and then another thing, I talked about how, let's turn off the Bollinger Bands here, that the S&P 500 seems to be a lot of times touching the 50-day moving average, then bouncing up. Well, happened here, and then we just blew right through that. And it hasn't done that since I looked before, hasn't done that since we blew through it down here, that was in October, and here was last September, started high, blew through it down there, and then continue to rally. Anyway, so with a large market correction, there comes extra volatility, and one of the things that measures the S&P 500 volatility is the VIX. Okay, now if you're unfamiliar with the VIX, let's see if we can search for that. It's just a volatility index of the S&P 500. So basically, what happens is when the S&P 500 crashes, the VIX goes up, okay? So we're up almost 5% today. That's a significant move. Let's go into Trading View again, and let's see. Can I look at the VIX here? So what we're going to do is I'm going to show you a back test on how to. So here's the volatility. You can see big spike to the upside. So what I want to show you is when there's the thing about volatility is it's mean reverting, okay? Unlike stocks, so some stocks can break out to the upside and just keep going. Sometimes they can break out to the downside and just keep falling, okay? But that isn't quite the case with the VIX. What happens with the VIX is you see spikes and then sharp sell-offs, okay? Because it's a measure of volatility, and volatility tends to be mean reverting, okay? So you see a spike to the upside, then a big pop to the downside. Spike up, down. Spike up, down. Okay, you see it over and over again. So there's a way to profit off this. And so I'm going to show you how. I'll show you a back test using a ETF of the VIX, which is the VXX. Okay, it's ETF of the VIX. So let me show you the back test here. So I'm looking at a put spread. Okay, a long put spread, not to be confused with a put credit spread. This is a put debit spread. And if you look at the back test, looks like you get the most bang for your buck when you buy out of the money puts and then sell even further out of the money put. Okay, so you get a better win rate with more in the money puts, but your return is not going to be as large. So today I decided, today was a big spike. If you look at the VXX, we were up almost 11%. After hours, we're up another percent. And I'll just show you the criteria for the trigger that opens this. So it's just when the RSI, the relative strength of the VIX, the VXX gets above 50. Let's go check that out on our chart here. We got that underneath. Actually, before I show you that, just look. This is a pretty high. We're in the oversold, like overbought level. Even though you can't really, you can't buy and sell this, but we haven't seen that for quite some time. So let's look at VXX. Okay, so where's the RSI at? You can see the RSI is pretty high, and once again, RSI is at 62. Once again, you can see every time the VIX gets over that 50 mark. So let's look. Here it got over 50. It actually continued for the next 3 days here to the upside. That could happen here. And then fell. And then a couple other times we see pops, but we fall. We see pops, we fall. Pop here, fall. pop here, fall to the downside. So once the RSI is over 50, this trade gets triggered. And something to keep in mind, this is a 60-day till expiration, 60 days till expiration. So I chose I went out and bought the 26 puts and then sold the 22 puts. Okay, so that was the 15-30 delta approximately. And if you look, this is our P&L graph. So in order at expiration to make money, the VXX has to be below $24, which is actually pretty low. But I really do think that by Friday, this VXX will be down a good amount, and I should be up on these puts by a decent percentage. I could be wrong. You never know in the market. So that is the plan. Okay, that's the plan, and probably close out at 50% gain and walk away with a smile on my face. So hopefully that works out. There's a lot of craziness going on in the market, so hold your ground, and hopefully we all come out on top. That's it. If you like these videos, like and subscribe. And as always, this is just for educational purposes only. All right, peace out.